Hi, I'm Pattie Detwiler, and I have Kirk Grantham with me. Hopefully our audio comes through better than the opening, but we're going to be talking about succession planning. And just to tell you a little bit about myself, I'm a bed and breakfast real estate broker and consultant, and I have hospitality properties for sale. So I do consulting, education, future planning. I work with buyers and sellers, aspiring innkeeper workshops, in financing and pre-approval, and doing speaking on exit strategies, among other things. And Kirk Grantham, who's with us, he practices law in West Palm Beach, where he's a Florida board certified specialist in real estate planning and also in real estate law and estate planning and real estate law. He's the owner of Standard Title Insurance Company and also Florida Exchange. He's a qualified intermediary for the tax-free exchanges. So Mr. Grantham and his wife Cheryl, they own Casa Grandview, which is a beautiful historic inn, cottages and suites in West Palm Beach, Florida. So he's familiar with the industry. So whether your retirement is 30 years away or just over the horizon or not in your plan at all, succession plan is vital to ensuring the continued success of your business. So a good succession plan can help you transfer ownership when the time comes, maintain your lifestyle in retirement, provide for your heirs financially, and prepare the business for unexpected events. And so that's kind of what prompted us to do this today. So as we're all going through the coronavirus outbreak, it gives us time to ponder and do some things we put off or don't want to do or to think about. And succession planning is really one of those topics. So life happens, and unless you have a plan to deal with it, to deal with the unexpected, basically, the business you work so hard to build could crumble if you become disabled or you pass away, you get divorced, or you decide to split with your business partner. So first of all, I want to say welcome to Kirk, and thank you for being with us today. It's good to have you.
Well, thank you, Patty. It's nice to be here. I think this would be an important discussion for our audience, and it's something that we all need to be realistic about.
Yeah, for sure.
In my own case, especially, I think it's a good rule of thumb to look at your estate plan at least every 2 years, and when you're operating a business, maybe even more frequently than that. But every case is different. We don't know when the Grim Reaper is going to show up, but maybe you'll be retired by then, so it's not a problem for the members of our audience. I basically have always advised all my clients to always marry a wealthy woman. And you don't have any problems whatsoever. I haven't always followed that advice myself in all of my marriages, but they've always been beautiful women, and so much for my advice about that. So let's get down to business.
Well, first of all, I'm going to say I know your lovely wife, and I probably met her when I was about 25, so I'm not going to date myself right now. But you are one of the best attorneys I know and can count on, and I'm sure this advice is going to be invaluable. So I don't want to get stuck in, well, I want to get to a bunch of questions, but what happens, when you die without a will? What will happen to your family and the income that the inn is producing, in just a broad way?
Well, quickly, Patty, your state legislature, whatever state you're in, has written a will for you, and it typically says that if you die without a will, your assets go to typically your closest family members. Special rules for different states involving what exactly your spouse is entitled to inherit, so on and so forth. But it's so simple to have a will that for the life of me, I really can't picture any business person operating a business who doesn't at the same time have something like a will that's so important. And granted, there's a psychological barrier among some people about doing this, but let's be realistic. Everybody needs to have a will.
I think it's hard to do. I remember I must have been in my mid 30s, maybe late 30s, and my husband and I were going to Europe, and I had a daughter in middle school and a son in high school. And that was the first time that we sat down and did a will, which was pretty dumb. We should have done that when our kids
Yeah,
were little.
that's typical, Patty. You thought something horrible was going to happen to you when you went to Europe, so that made you do this. The other day, we had a couple who came by the office. We've been bugging them to finish up their will, and they came by and said, we're heading out. We need to sign that will. And they came by and we said, where are you going? Why have you finally decided to sign your will? And they said, well, we're going to the fair. And of course, they thought they were going to eat all that cotton candy and corn dogs and the Ferris wheel and all that stuff. So they thought they need to have a will ahead of time. But
That's funny. I was more afraid of the plane crashing than anything else because that's a long trip over the ocean.
You're
But
more prudent than they were, Patty.
well,
Maybe not. I don't know.
well, so a question that I think that will help us innkeepers is what kind of estate plan could pass into your heirs upon your death and protect their asset from passing through the probate proceedings, and would protect the property from any potential creditor judgment as well? Is there such a thing?
Well, that's tough to do because your creditors are out there. You signed up signed a promissory note or whatever, and it's hard to get away from your creditors. But actually, your death is the ultimate exit strategy to get away from your creditors, because in Florida, the creditors get wiped out after 2 years. If they're unsecured creditors, like on a credit card or a trade account or something like that, like your supplier from whoever's giving you the food for your bed and breakfast. But after 2 years, if they haven't filed a claim against your estate, they're wiped out. But I'm being kind of facetious about this, but realistically, you shouldn't think that you're going to be able to accomplish a lot in getting away from your creditors. You need to be realistic about that and have money to take care of your creditors, because if you're not here to take care of them, then they're going to be hounding your family. And typically, here in this case, we don't need the wealthy wife so much as we need maybe a good supply of life insurance that will come into the family that would be useful to pick up the pieces. But every case is different. But to avoid the probate procedure, typically, and this may be beyond the scope of our meeting today, but to avoid the probate procedure, there are things like jointly owned property, inter vivos trust, things like this. Sometimes you want to go through the probate procedure, believe it or not, because that way you do indeed wipe out these creditors. But it's all on the table, and it's all something that should be realistically talked about. And to be realistic about things, you need to talk about your estate planning. And all of this will come up when you sit down with your attorney who's going to advise you about this. Just don't put it off. And then, as I say, the rule of thumb is to review it probably every 2 years.
I would think, because all states are different too, how you set up your business, how you take title of that property. I know that could be a whole lesson on itself. So what I kind of want to get into is if there is an unfortunate catastrophe or incident, and is your business ready to change hands and of ownership immediately versus something that has to shut down in the meantime? So today I'm going to ask some questions for our guests to consider, because if you take this and you answer no to reveal some of the deficiencies and what you're doing, know that you're not alone, because none of us really like to face our mortality, which is kind of more of our conversation today. But succession planning is also about exit strategies and some other things that we can go into another time. So I want you to feel free to write down questions. I think there's a way to do that through Zoom, and they can present the questions as we go. So one thing is, have you defined your personal goals and a vision for the transfer of ownership in the management? have you decided how you're going to exit your business? You know, because usually when you create a business, you have a business plan. And sometimes, especially the lenders want to see what your exit strategies are. And passing away is usually not on the list of acceptable strategies. But what happens to your end if you do become disabled? I went through breast cancer 10 years ago. And I still, you know, fought through that with all the chemo and everything and still had my end running. I couldn't have done that without help, you know.
Right.
So, you know, the time for planning and for these unexpected things that happen in your life is really what we're talking about. So, Kirk,
Pattie, you got to develop this as time goes by. When you start out your business, you're not thinking about this. Everything is upbeat and you're optimistic and so on and so forth. But as time goes by, you got to routinely have good records to review. You need to have good bookkeeping and accounting records so that if any time you want to sell your business, you're able to demonstrate to a buyer what your business is worth. And you can't go back and make this stuff up. So from the very beginning, realistically, you got to inform yourself how your business is doing. And you got to be in a position to inform somebody else, like your bank or your prospective purchaser. So that's going to be the starting point of your planning for succession or selling, refinancing, or what have you, is having a good business model in place where you have a good bookkeeping experience.
That's so, you know, I teach exit strategies all the time, Kirk, and people are amazed at, you know, or I'm amazed, I guess, that people don't always understand what they're looking at when they look at that. But let's go through.
Well, Pattie, a lot of times they're looking at a real mess.
Well, you know, I'm a logistics person. I'm an accounting person. And I mean, I understand. I know how to read the financials because I do this all the time. And a lot of people, they have their own talents. You know, I had a friend that had an inn in Pennsylvania and she was a beautiful artist. Well, I would go up there in the summer in my slow times, have someone cover my inn, and I would do her books all summer. And she had a fabulous place, but she had no clue how to keep track. That wasn't something that she thought important. So I think that's why it's important to train. But let me ask you, or I'm asking our audience really, do you have an identified successor in place? You know, are you going to transfer the business to your heirs? Are you going to sell the business to your business partners if you have them? Are you going to sell the business to a key employee? I've seen that. And or are you going to sell the business to an outside buyer? So first of all, you've got to think, if I'm going to create a succession plan, what do I think? You know, if you're going to do it to a family member, you know, have you resolved the family issues that often accompany the leadership and ownership decisions? I mean, that's a big one, especially if you have a lot of kids. And
that's a big problem, Pattie, big families. If you have maybe a big asset where one of the children is going to wind up running that asset, and it makes the other children jealous, and maybe they feel like they weren't treated properly, or maybe the one who inherits this endeavor runs it into the ground or whatever. It's a tremendous problem. And probably statistically, I venture to say that most small businesses do not last more than one generation. It's very hard for a small business like an inn to be passed from one generation to another. It's difficult. It can be done, but let's be realistic. Maybe the younger generation doesn't have the same goals that the older folks have, or maybe they married somebody who doesn't have the same goals. And
any business. My dad was a professional photographer, you know, and he had a great business, but none of the kids had that passion. So the question for the audience is, have you had a discussion with your children, and do they want to take over the inn, or do they have a different passion for their life? When I was an innkeeper for 12 years. I had a talk with my adult children, and their lives were taking a different direction from what my passion was. I loved doing the inn. And they didn't want me to die and leave it to them, but they were always helpful. They were always a part. They enjoyed it. We all did it together for about 12 years. And then they went off to college and you know, they left me.
Right.
But
As time goes by, their things change.
well, it wasn't their dream, you know, and so, you know, Kirk,
Remember my rule of thumb of every 2 years, you got to be on top of everything.
well, you and your wife have a beautiful in property in West Palm Beach.
Well, here's my succession plan. You know, it's my experience as a lawyer is that the husband always dies first. So my succession plan, I'm sure my wife will outlive me by 50 years. So that's all I have to do, right? Is that,
well, if you die first, Cheryl's going to kill you. She already told me. She said, Kirk, you cannot leave me. So, but yeah, I mean, and you have a couple kids and you have one working in the inn.
Yep.
So, you know, that's really an important discussion to have.
it's a serious, extremely serious discussion. And my experience is that the children and to a great extent, the older members of the family, but basically the children are hesitant to bring this topic up, and they don't want to broach the subject of mom and dad dying, or for that matter, even being sick for an extended period of time. So mom and dad have got to be the leaders on this as usual. And you've got, once again, I'm saying everybody's got to be realistic. And maybe there's not a good answer for succession. Maybe the answer should be if mom and dad pass away, or maybe one of them can't run it by themselves, maybe it needs to be sold.
Yeah.
Maybe that's going to be the legacy going down to the family. It's going to be money rather than a business that fails.
And that's fine, you know. So does your, let me see. I'm trying to stay on track here, you guys. So does your plan include a strategy to reduce estate taxes? And I would imagine you'd be one to answer that, or is that just something you put in your estate planning and things like that?
That's a fixture in every estate plan, Patty, not just ends. But fortunately, Congress recently has made the estate tax exemption fairly large, over $11 million. So most families don't have this on the table anymore. But the big picture in taxes could very well be, in doing your estate planning, is obtaining a stepped up basis so that when mom and dad pass away, the kids who are inheriting get a stepped up basis so that when they sell the inn or start operating it, they have a higher basis to depreciate or to cut down on their capital gain. But this that's a tax issue, and it's part of the planning process, and it's just part of it. But at a very minimum, everybody, when they're doing their planning, you don't know when the time is going to come when you really need it, but you need to have the tools in place to make it work. And some of these tools are things like signing a durable power of attorney, one spouse authorizing the other one, or maybe having a child or some other trusted member of the family as a standby agent to do things for you. Like, for example, if I have a stroke and I can't sign anything, then my wife can sign things for me. Or maybe my daughter or my son can do things for me without having to set up a guardianship. Because one thing we want to do, we want to avoid a guardianship.
Okay. I mean, this is really interesting. And again, there's a whole avenue we could go off on the estate planning and the taxes. But let's look at number 5. You know, I help people buy and sell inns all the time. And when, you know, we're talking about liquidity here. Will there be sufficient liquidity to avoid the forced sale of the business? You know, some inns are seasonal. Some people think they have a lot of money. They spend it at the end of season, and it's almost hand to mouth as a business, right? So, you know.
Once again, Patty, it's an example of people not being realistic.
Or understanding their financials and their cash flows, you know, how important it is to know what are your liquid assets, because you may have you may have equity in your home, but people don't consider, unless you can get an equity line of credit or something, that's not a liquid asset because you'd have to sell it. Could take 5 minutes, could take 5 years. Do you know what I mean?
Unless you borrow against it, and it takes time to do that. And the problem with borrowing against it is you have to pay it back, or you lose your security that you put up.
but it's something to think about. And if succession will one day require the transfers of assets, have you created a buy-sell agreement, basically, that details the process ahead of time? And what I mean is, you know, when you are, if someone's buying a business, or even if they pass away and there's a business left, you still have furniture, fixtures, and equipment. And a lot of times when people buy or, you know, or sell a home, most of mine are turnkey transaction. That means everything's included except the owner's quarters. But some people will say, well, this was my mom's artwork and these are the 5 pieces I want to keep, or whatever. But to identify what passes with the estate versus what goes directly to someone else, or what's personal property, I think those things, those personal items like that, if
Patty, you could get into that if you are lucky enough to have a heir appointment lined up, or you have a successor picked out. But my feeling is so many people do not have a successor lined up.
even if you don't, you still need to know what your assets are. You know what I mean?
You need to know what your assets are, and you can't do that unless you have a good bookkeeping system.
Yeah, I agree.
You got to be realistic with that. You got to review it often, and
Well,
you got to have a package there that if it comes up, can be put on the market and sold. And you need to have things in place, like if mom and dad are infirm or in the hospital, then maybe they need to be already have signed durable powers of attorneys so the younger folks can sign things for them and carry out this plan that was already in place, or to negotiate a plan that needs to be in place.
well,
It's a very tough subject.
on 7, it talks about, is there a detailed contingency plan in case the business owner passes away or becomes unable to continue working sooner than anticipated? And one thing that, like, when I ran my inn by myself, you know, so what policies did I have in place that are easily found and defined, you know, when it comes to how we operate our inn, whether it's cancellation policies or whatever, where can someone else find that? And where is your list of suppliers and vendors? You know, who do I get my amenities from? What plumber do I call? Where are the relationships? And where are all the passwords? If you're not around and someone has to get in a ResNexus or Think Reservations or any of your marketing sites or whatever, a lot of times we keep stuff in our head, or I have 10 pages of passwords over the years because they make you change them all the time, you know? So I try to keep it up, but does my kids have my password to get into my computer? I'm talking about realistic, everyday operations, whether you pass away or you're incapacitated or in a car accident, whatever. You know, if you're not there, where are your marketing? What are your marketing sites? Where, how do I continue what you've been doing? You know, who's been writing that stuff? And even if you do write it all down, who knows where it is? Do you know what I mean? Is it in a booklet that would be easily for someone to understand? This is where you find everything for me, or do you keep that with your estate planning documents, or your whatever it is? Somebody's got to know, and it's not always just families. You know, it could be a business partner. It could be however your inn is set up.
That's a very good point, Patty. It seems like every day we acquire more and more passwords.
I got it. I hate it. Whenever they tell me I've changed my password, it just makes me mad. Because it's like, oh my gosh, it's crazy. And if you don't know the password, you can't get in, you know. Even if people are using Facebook or some of the social media sites, you've got to have their password.
Once again, it's a case of being realistic. If you're not able to do that, keep up with that, have an accounting system, have a bookkeeping system. If you're not able to keep records and to keep a big notebook with all your suppliers in there and your policies and procedures, if you're not that kind of person who does that, maybe you're like if you're kind of like the lady, your friend in Pennsylvania, who likes to draw things, maybe you really shouldn't be in this business, or maybe you need to have a darn good partner who handles that part while somebody else does the creative part.
It's that booklet of where everything is, I think is, even if you don't pass away, now not maybe all your passwords per se, but you know, if you're going to sell a business, that's part of your exit strategy to have all these procedures. Now that doesn't mean you can't change your procedures, but to know who your vendors are, to know, you know, where do you go to your licensing and, you know, just all of the facts. So it's in one place. And if you don't know how to do it, you know, it's worth hiring someone to do that. You know, it might not take that long, but I wouldn't, you know, anyway, that's so important. And
one of the things I want to emphasize, Patty, and I think you and I have probably spoken about this in the past, whether you're selling an inn or maybe somebody's passed away, you're trying to get a value on it. But once again, being realistic, if you've been operating your business as a cash business and you haven't been reporting everything and not doing correct sales tax reports with the government and so on and so forth, if you live by cash, you're going to die by cash, and it really affects the value of your inn, and it affects the legacy that your family is going to have for you if what you have is a mess. So you need to be realistic, have a good system in place that somebody can understand, and at the very least then have in place as part of your estate planning tools, things like a will or a power of attorney or trust or so on and so forth, saying who's going to be in charge, so that if mom and dad become, maybe they're stroke victims and they can't do anything, somebody's in charge and they know where everything is. It's, once again, these things happen, so let's be realistic about it. That's the main thing I want to emphasize to everybody today. We don't have a magic answer for everything, but please look at everything routinely, have the right tools in place, and try to be realistic.
Well, I think all the stuff written down is imperative. It's just it's like when you see like a messy closet, you go, you know, I really want that clean and I'll get to that, but it's not going to be today. So that's really the truth of it. So I imagine when someone can meet with an attorney about, you know, what are some techniques that will help them, well, if they're a corporation, if they have stock, you know, everybody, sometimes people do LLCs, some people do sole proprietorship, some, you know, the bigger ends might have what are your thoughts on number 8 here?
Well, once again, let's be realistic. If you're operating under a corporation, do you have a corporate book? Because quite often people don't bother to spend the extra $80 to go buy a corporate book, and you need to have the stock issued. And then if you're going to be trying to avoid probate by putting, to avoid probate of your stock, like your other assets, you need to have the stock issued in the name of your trust or trust plural. The whole thing is a matter of being realistic and have the whole thing reviewed by a professional as the question of whether or not this all makes sense. It may make sense as long as you're not audited by the IRS. Who cares? It may make sense as long if your local state Department of Revenue doesn't bother auditing. Who cares? But it's going to be a real problem for you if you want to sell your business, or if you want to have some sort of succession in a reasonable manner in the event that somebody passes away. So let's try to get our affairs in order.
Let me ask you a question real quick. Years and years ago, you know, I started out as a legal secretary way back when. That's when I met you doing, but anyway, if you say you're a corporation and you don't do your annual, if you don't use the corporate book like it's supposed to be used, let's say that, put your meetings, put whatever, your stock distribution, if you don't act like a corporation, your creditors can pierce that corporate seal. Is that right?
Yeah, that's the theory of law, that it's the idea that's called piercing the corporate veil. If you say you're a corporation, but you're really not doing all the right things, it's a possibility that the corporate entity could be disregarded, and you've gone to the effort, or you think you've gone to a big effort to form a corporation to shield yourself from personal liability. But if you if you're not operating the right way, it doesn't work. And it's same thing with an LLC. An LLC, it's company entity, it can be ignored also.
Yeah. If you don't do what they
do
want.
the right thing. So you need to have everything, once again, reviewed routinely. And then, this is a pain in the neck to operate a business. I've always said there's two different kinds of people in the world. There's people who made a payroll and people who have never made a payroll. And if you don't know how to make a payroll and operate a business and so on and so forth, maybe you shouldn't own one of these ends. Maybe you should just always be working for somebody else the rest of your life.
Well, so many people, I know in the 12 years I ran my end, so many people come and say, oh, I always wanted to do this. And like I said, they have different talents. So when I work with buyers, I really try to find out what their background is. And if you have a successful enough end, you can hire the people to do the things that you don't know how to do. Do you know what I mean? But, having that entrepreneur spirit, we don't know everything. Geez, I know what I know now because of everywhere I've been.
We're going to hire somebody to cut the grass, and we're also going to hire somebody to help us with the bookkeeping.
Yeah, it's what you just kind of hire what you need. So, so whether you or someone else or someone in your family is going to depend on the business to meet retirement cash flow needs, that's another conversation to have when you're analyzing where you are cash flow wise. Because, I lived through 9/11, 04, and 08 when I had my end. And in 08, I actually had breast cancer at the same time. So that was fun. So, those years probably didn't look as good as other years on the books. So that's why it's so important to look at everything, who is counting on this income. And if you have kids or however that is, what do you think about that? If they're going to depend on the business for cash flow, that doesn't mean you take all the money out.
Yeah, well, once again, it's a case of being realistic. You're fooling. You're just fooling yourself in some cases. Yeah. But let's face it. Some of these operations, I think maybe they're not a bona fide business operation. Maybe it's just a lot of fun to have a big house and entertain people and so on and so forth. But when you get ready to sell it, you're going to be selling it as a big house. You're not going to be selling it with any business value attached to it. Unless you have the good records to show that.
Well, we call that a lifestyle in. A lifestyle in is one that it doesn't, cover the debts or, the operation. Usually someone has a lot of money or whatever, and they're working outside of the house. And then you have an in that's feasible, which means it's got the potential, it's doing good, but it has the potential to be better with different operation. And then you have the, a viable end, which, has paycheck to the owner and.
Well, I'm not criticizing that operation. I'm just being realistic because in the long run, the valuation of real estate, as we all know, keeps going up, 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 maybe with credits and canyons and peaks as it goes. But in the long run, it's going to work out. So if you found a way to handle a good real estate investment by minimizing your out-of-pocket expenses by running an inn, that's good. And maybe you can pass that on to somebody else, but you've got to have good records to do this. And then in order to, at the end of your days, if somebody has passed away, if they have the right estate planning stuff available, they've signed documents ahead of time, maybe you don't have a successor. Maybe you haven't had this talk with the kids, and so on and so forth. But if you've done the right things, then the person you put in charge can do that for you. But that's not going to happen if you haven't even bothered to have a will and so on and so forth. And to be realistic all along about, hey, we're going to need some cash in here. We're going to need to have maybe a life insurance policy that will come in and carry the end for maybe 6 months or something in the event of somebody's dying.
That's exactly what I was going to point out. First of all, it's always good to know what your business is worth at any time with the fluctuation of real estate and your business value. So having your business evaluated has many, many benefits, and it helps you if you need to develop a retirement income strategy and properly value what you're looking at, and then having the added insurance protection if you feel that there's shortfalls, or if something happens at any time. It's always good. Like, I know when we used to do commercial lending and everything, having that life insurance policy to fulfill the payback was almost always a requirement. So
Right. There's nothing like it. It's even better than having a wealthy wife.
Hey, Patty, I just wanted to pause here. If you could hear me okay, I just wanted to let you know we're down to about 9 or 10 minutes now. Just wanted to give you the heads up.
Okay, well, do we have any questions from the audience that we can focus on?
Right now, no. The main question was getting your screenshot, but I let them know that document was already uploaded onto the ALP website.
Oh, I'm sorry. I thought you could see my screen. That's why I didn't. Okay. I apologize, you guys. I did reiterate most of the questions on there, but I thought that.
One just came in for the best approach to take with a business valuation.
Well, you need someone that knows how to do that. Like a residential appraiser cannot help you with the business valuation. I mean, I do that, and I have counterparts in other states that do that. There's several different formulas, and all don't relate. All of them aren't applicable to every case, but you have to know how to look at it, you know, to come up with the value.
Well, let me add, it's, once again, I know I sound like what used to be called a broken record, but you got to be realistic going into this. If you have good records, then the appraiser has something to work with.
But you have to get the right appraiser, Kirk. You can't residential appraiser.
Well, I know, but you can't just hand them a house and say, we make a lot of money here. You got to give them some actual records. So there's something they can hang their hat on.
You don't have to, like, if you say, oh, I want to know what the value is. If you can go get a commercial appraiser, and they're like $3,500, $4,000, something like that. But a lot of times, myself and some other counterparts can look at your numbers and know, is the value of the real estate, your furniture, fixtures, and equipment in your business is it going to be based on your income and expenses, or if there's not enough there, then you have to start looking at it another way. So, but yeah, I think it's imperative to have an understanding. Like I said, there's many ways to look at the numbers, the real estate. I have people call me all the time, and everybody wants over $1 million for their property, even if their business is only worth like $600,000 or $700,000, you know. Or it's educating on what brings value and what you have to sell. Because if you don't have any net operating income, you got nothing to sell for the business. You only have the real estate. And sorry. So yeah, it's really important that that you know where you're at. You know what you bought it for, right? But everything you do isn't necessarily a dollar for dollar improvement on the property that increases the value of that property.
Well, believe it or not, a lot of people know what they bought it for, but maybe they haven't even kept track of what they put into it afterwards because they haven't kept the good records. It's hard to believe, but that's true. Like that out there. I
see it all the time. You know, the first thing I ask for is, you know, some of your P&Ls for the last 3 years and stuff like that. And it's amazing how, you know, with QuickBooks, how easy it is these days. You think you can get a quick report, but I see a lot of handwritten stuff, and that doesn't, you know, I've seen ends worth over $2 million with handwritten books, and that's crazy. That's absolutely crazy. So I think estate planning is really important. And for those of you that are in other states, it's always good to talk to a local attorney. And, you know, we're all in different situations. You know, some of us might have a partner. I knew an inn that had 3 partners, and nobody was married to each other or anything. So there was a partnership there. And so what happens if one partner passes away? It probably depends on what that agreement was when they set it up, you know, or if you want to separate from, you know, do they have prenups on ends, you know, in business relationships? And
well, it's a rule of thumb. You know, you get into a partnership, it's easy to get into a deal, but it's hard to get out. So you need to have it in writing ahead of time when you're starting up.
when I was very young, someone told me, don't ever get into a partnership with another person, not talking about your spouse or anything, because he said it's like being married without having the conjugal visits, you know? So I've always remembered that. I was very young when I heard that, and I guess it makes sense, you know, when all of that, there's that could be a bad thing.
Yeah, that story goes on and on.
Yeah, yeah. But everybody takes ownership in a different way, you know, and it would be sad. I mean, we don't want to lose anyone, but we already know that some innkeepers have had you know, might have passed away, and other things have happened where having these steps in place. Besides knowing the valuation and knowing the books, I'm telling you, you can have all of that good and not know the plumber, not know your reservation program, you know, all of the details that we said you really should have. So, and someone you should not only have it, someone should know that you have it and where it is, you know, so you can keep operating. So is there anything else you'd like to add, Kirk?
I just hate to say goodbye without just emphasizing once more. I realize there's a psychological problem in doing estate planning, and there's going to be a psychological problem in addressing this succession issue, because it's hey, we're reaching the end of the trail here. But you've got to be realistic. So Phil, you've got to have the philosophy of saying, I'm going to be realistic about life and what life brings us. So let's be realistic about things, and things work out better for people who are realistic.
Yeah, I know. And I think we learn as we go that what we need. I mean, I guess when I was running my inn in the early days, I had one of those Nextel two-way phones, and everybody I used was on my two-way, you know, whether I needed a plumber, electrician, or whatever, if I had an emergency. Okay. But I didn't have it written down. I had it in my phone.
Call them, right? You know.
Yeah. And I bet we all have that. We probably have a lot of things that are in our phone. And the other thing, you know, when you're on a computer these days and you've already been on the website, they'll recognize you and you don't have to figure out your password. It'll automatically come in. But if you go, like if I go from my desktop to my laptop, you know, I'll get this, an email on my desktop saying, you know, another IP address has logged in. Is that okay? So you might, if you don't have the access to the original computer, you'd really have a hard time finding passwords to get in. And then what do you have to do? Do you wait for death certificates? Because I don't think you can get Google on the line. I mean, I think a lot of people we do business with, you can't actually talk to. Apple, you know, who can we get on the line anymore? That's why hospitality is so great, because we talk to each other and we're very personable.
Well, Patty, let's try to tell our people as a starting point for thinking about this planning is try to get a handle on what their asset is worth, a realistic handle, and as where they get that valuation, there are different sources, but try to have that in hand when you sit down with your estate planner.
Yeah, I think that would be really helpful, especially your cash flows. And I would say for the last 3 years, tax returns, things like that, because it really gives a true picture of, you know, if you don't have any money for retirement, or maybe they can help you with the tax accountant or whatever to plan for that. You know, if you're going to be in this for a long time. Some people, the average used to be what, 7 to 12 years. But people have been in 20, 25, 30 years. That's their whole life. And their whole family was brought up that way. And they depend on that end. So like you said.
It was a good fit for them. Some people, it's a good fit for them.
Yeah. Yeah. I enjoyed it. I really enjoyed doing the end. I think that was the best thing. And I love helping people now, buying and selling, or even creating, you know, because, you know, we all have different dreams, and enable someone to fulfill their dream and save them money at the same time is always a fun thing to do.
Well, sure. We enjoy the operation of our end.
I know. You're a full-time attorney, and you're out there serving coffee and serving the guests.
No, I meet people from all over the world in the morning for breakfast, and then I get up and go to work.
I know, I know. I think it's awesome, and your place is beautiful. So I really appreciate you taking the time today
Oh, sure. It's been
to
a
have
lot of
this
fun.
conversation because,
I hope the message is getting out. Let's all be realistic.
yeah,
Okay.
even though we don't want to be, but you know, I really thank you, and I hope that whatever questions you might have had as the guest for this presentation, that you'll think about it, write them down if you don't want to share them with us, but definitely be prepared to take some steps that you think will benefit you in your life, and we really appreciate it.